Good afternoon, Tsupiteros, and welcome to another edition of Pillow Talks. Before I begin, I'd like to thank one of my sponsors, AAA Equities. If you'd like to trade with a broker that has automated stops and automated breakout orders, do trade with AAA Equities. Okay, so we'll start off again with the market. I'll show you right off the bat the chart of the PSEI index. So just as I expected last week, the market has come down and was quite weak the whole week this past 5 days, no? And we even closed the week at the lows. In fact, we're actually testing this support line right now at about the 7,000 level. No, if this market is still going to trade sideways from here, then it should hold above 7,000 and hopefully climb back up towards maybe the 7,250 level or 7,3. But I'm a bit skittish on the market. Again, it's actually the season to be bearish. We're now approaching the traditionally bearish February to April season. There's not much catalyst in the short term for the market. I think we might still go lower from here. If we do go lower and we break below this low here of about 6,928, that would probably trigger further sell-off, and it would trigger stops to be triggered in a lot of positions in the market, and it could lead to a downswing all the way here towards this previous low of 6,740. I hope it doesn't happen, but I'm certainly not discounting that possibility. I think this market right now is sideways at best, and at worst, it could actually trend down in the short term. So, yeah, we don't want to trade the blue chips right now. We don't want to look at the second liners at the moment, and it's all third liners from here on. Okay. So in the second part of my discussion this afternoon, I will be talking about the third liners again. But before I continue, I'd like to thank another one of my sponsors, APS Online. If you'd like to trade with a broker that has excellent research, do trade with APS Online. Okay, so I have a short PowerPoint presentation here for you, and I'll be discussing again the third line issues that I'm sure all of you are a big fan of at the moment. Okay, so in the last couple of days, you saw the third line issues. Let me just go back to my to my MetaStock here, and I'll open one of these Basura Stocks. Let's go to, let's say, Basic. Okay, Basic is just one of those third line or Basura issues that just went berserk early this week and then just dropped from a cliff the last couple of days. It happened in almost all the third line and speculative issues. So you had this peak probably in on last Wednesday or last Tuesday, and then this very big drop last Thursday, and then a capitulation selling early last Friday. Okay, so that's what happened in the last couple of days in these Basura stocks, and all these stocks had very very deep retracements. No, like let's say from in basic, the high was at 215 and it went down to as low as 92 cents. Okay, so it happened in all issues, not just in basic. You can see it in APL, you can see it in FA, you can see it in OV, OPM, LC, IS, all these third line issues. So in my PowerPoint presentation this afternoon, I'll be talking about them, and I'll be showing you that not all of them are the same. Okay, it might seem like all of them are like moving in tandem, no? And all of them are behaving the same simultaneously, but actually there are stronger stocks than the others, and there are weaker stocks than the others. Okay, that is why the title I have here is that not all basuras are created equal. Okay, here in my next slide, what I did here was that I calculated their retracement levels. No, so like from in basic, let's go back to the meta stock here. In basic, I started off with this low here up to this high here and calculated the retracement from 215 all the way down to 92 cents, and that gave me a retracement level of, for basic, 66.49%. Okay, so I did that for all the Basura stocks. These are the 20 of the most active Basura stocks in the last 1 or 2 weeks. Okay, so you'll notice that there are some stocks that have retracement levels of like 100%. TBGI even retraced more than 100%, as well as same with IS and APO. But there are those stocks like PHA, APL, Basic, Altus, ABA, SOC, and Vulcan, wherein their retracement levels are much shallower than the others. Okay, so I classified all these third line issues into 3 classes. Okay, so those that has a shallow retracement. Okay, those that have like medium retracements, and those that have very deep retracements. Of course, the deeper the retracements, the more bearish the stock. The shallower the retracement, the more bullish the stock. Okay, so these stocks at the top of the table are the most bullish ones, and those at the bottom of the table are the more bearish ones. Okay. Okay, and then what I did now is I wanted to find out who among these stocks were the strongest last Friday. Okay, so I ranked all of these stocks from the lowest to the highest based on their behavior last Friday. So Vulcan was the top performer last Friday, going up by 23%, while APC was the top loser as the stock dropped by 7.5% last Friday. Okay. I also wanted to see how much they rallied from their lows last Friday. I would tend to think that the lows that you saw last Friday were already short-term lows, and you might not see them anymore come Monday or come Tuesday. And I would presume that most of these stocks will rally off those lows and will continue to rally come Monday or Tuesday. So I wanted to find out which among these stocks rallied the most and which among these stocks did not rally much last Friday. So you have here the strongest one from the lows was Abra. So although Vulcan was actually the top gainer among all these issues, it was Abra that rallied the most from the lows. Okay, then you have Basic, IS, PHA, and then on the weak side you have APC, SOC, MAH, and Apple. Okay, so of course we want to find out which among these stocks should be prioritized and should be bought on the dips, right? And which among these stocks are we going to avoid, or are we going to prioritize on selling on strength? Okay, so I've come up with these rules, no? So if you are part of remember I classified all these stocks into those that are in the green side of the table, the yellow side of the table, and the red part of the table. Okay, so if you are in the green part of the table and you closed quite strong last Friday, then I would expect a 61 to 100% retracement going towards the upside. Okay, if you have a green candle but closed kind of weak last Friday, then I would presume that you would rally by about 38 to 50% retracement. Okay, let me just show this to you. No? So let's just let's see FA. Okay, FA is on the green side. Okay, and is also quite strong here in this table here, and is also a bit strong right here in this table here. Okay, so let's look at the chart of FA, and if I put a retracement, if I put the retracement lines here, I would tend to think that FA could probably climb all the way back towards it's 75% Fibonacci retracement, okay, which is around the near the 3 peso level, or it can actually even climb all the way back to its highs at 330. Okay, so but on the other hand, you have stocks like, for example, let's see what we have here. Okay, let's see. There's APC. Okay, you have a stock like APC wherein, okay, it still closed quite weak last Friday, and it even closed with a black candle. It still closed near the lows for the day, and it did almost a 100% retracement. Then I would only expect a very shallow rally from here, which is in this case I would only expect actually a 23.6% retracement. So from its close of 43, which we're not yet quite sure if it has already bottomed last Friday, I only expect it to rally towards the 45 cents level. Okay, maybe at best it could rally towards the 38% retracement, which is the 48 cents. Okay, so that's what I mean by these retracement levels here. So if you are in the table wherein you are at in the color yellow and you close strong for the day last Friday, then I would expect a 50% retracement. Okay, if you are in the yellow but closed weak, then I expect 38%. If you are in the red but closed strong, then I would expect 38%. If you are in the red but closed weak, then I would expect a 23.6% retracement. Okay, so after summarizing all of these in one table, I came up with this one. Okay, so These are the color codings of the stocks here, and I've like estimated their retracement levels on the way up. So you can see here, Vulcan might retest the highs. So that's what I mean by 100% retracement, okay? Vulcan might actually retest the highs because it was very, very strong last Friday. Okay, another strong one is PHA, which might retrace towards its 75% Fibonacci retracement, which is at 298, okay? The weakest one among the group is APC. That is why I only put a 23.6% retracement on APC, which is equivalent to just 45 cents. Okay? So, by doing all of this in all these stocks, I've now calculated their upside potential. Okay? And you can see here, the biggest potential upside is in OV, Basic, UPM, Abra, and ABA. And the weakest upside potential is in APC, ORE, SOC, PHA, and MRC. But, okay, there might be a bit of, let me clarify some of these findings, no? Of course, we would need to prioritize those stocks that are in the green. Okay, so, although OV seems to have a bigger upside than Basic, I would certainly prioritize buying Basic than OV or UPM. I would actually even prioritize buying Abra compared with UPM or OV. Okay? In fact, what I would actually try to avoid buying all those stocks that are in the red. Okay? So, the only reason why OV and UPM seems to have a very big upside is because they have quite a big the movement of their stock is quite volatile, okay, and the fluctuations of their stock is quite big. That's why the potential upside is quite big, even though it's just 38.2%. But I would certainly rather buy something that only that can retrace towards at least it's 50% or higher retracement levels. Okay, so again, I would avoid all those stocks that are in the red here. Okay, especially APC, which is actually the weakest among the group. And by doing so, then the best candidates actually right now is Basic, AR, and ABA. Okay, those three are actually the best candidates in this rally, okay, if you ask me, and based on this data that I've collected, okay. And I also want to say that I put these two asterisks here on PHA and VUL, okay, because you will notice that their upside, VUL's upside is only 18.8%. Okay, but that's because it's only just 18.8% from its previous high. Okay, that is a conservative target because actually, if you look at the chart of VUL right now, it can actually make a new high. And if it does make a new high, then it will be a lot bigger than just 18.8%. Okay, the same way goes for FA. I just put here a 75% retracement, but who knows? You know, it can actually, given that it's a very strong stock, who knows? It can actually, maybe it can actually climb all the way back up towards its previous high, or maybe even higher. Okay, so for VUL and for FA, these are very conservative upside targets. Okay, so again, my best bets are in Basic, AR, and ABA. Okay, you might also want to check out FA and VUL, and then also and then those that are like, you know, pretty good candidates as well, but maybe not the strongest ones are, you have T, APL, Altus, and SOC. MAH, MRC, and OR and ORE. Okay, so I hope I was able to give you some hints and some clues on what stocks to buy next week for the short term. Just remember, all these stocks are, well, maybe 75% of these stocks are just, dead cat bounces. What happened to most of these stocks last week just, destroyed all the technicals of their stocks, and destroyed all the technicals, and are no longer trending up, for most of these issues. So they might rally back up, they might retest the highs, but I'm quite certain that these stocks are gonna be very volatile, and you can expect that, after the rally there might be a retest of the lows. Okay, so that's what to expect. There's certainly still money to be made on these issues, but you just have to be very careful, and you have to be very selective on which stocks to choose from. So that's it for this weekend. Good luck next week, and see you next week again. All right, bye.